Good afternoon, and today is September 21st, 2023, and it's a Thursday, and let's do a end of day review for today. So basically, today is a second day play strategy, right? Yesterday we have the huge impact news, which is on Thursday, the FOMC meeting, and the market sell off. And today, the second day, which is it a follow-up day. So that's the phenomenon that we need to put in our subconscious mind, that how market working, right? And if you read the book One Good Trade, I think by Mike Bello, he's a S&B Capital founder. Basically, the strategy is that whenever you have a big catalyst news, then the following day you need to watch for the follow-up day. So if follow through that, if it's a down move, then if follow through, it's gonna be another down move. That's an idea right there. So that means if a down move, then today is a follow through day. So it's not a down move, so we have to look opportunity to short them. Well, it's said it's more easy than done, right? Say it's easier, but when you done, when you try to get it, it's not easy. We have to fight against our so-called human nature, right? By default, our psychology is not helping us when we're trading. Basically, we fight against the trend. We fight against the market. That's our nature, or our default reaction right there. Default reaction right there, right? But if you look at today's reaction, is exactly what happened right there. So the huge down move, then it's follow through. You see that it follow through day. We have to look opportunity short. However, we try to go long. That's the thing that I try to think that we try to learn from our mistake. Let it be honest right there. We take a real trade today, and we lost 36 cents. So how do we go along? If we know that yesterday is a huge down move, then today every time is what? Every time it make a swing high, then it's time to sell. And that is exactly today. You see, every time you have a relative swing high, you get sold. And the last swing high around here, 1236, it got smashed down. Huge down move right there. About $3.65, right? Okay, that's over it. Okay, let's look how do we come up and how we enter the trade in the long position right there. So basically our idea, okay, we saw that it had down move, right? And this is the first time it make a high low. So we thought that is a market structure shift. And we marked that area. And then we saw that it break, you know, the market structure right here, and it go up right here. And then it make a move down. Right, at first we think, okay, we can go long right here, but we didn't, we wait. And when we saw this liquidity sweep, then we saw a huge explosive up move. We didn't follow that either, but we wait. Yeah, we patient wait right here. We're going in here at 10:30, which is a perfect time, right? In order to go reversal, we have to wait at least 10:30, and we did for today. But however, it did not work out for today, and that's what we are trying to analyze to see what we can learn, you know, because we try to build a trading system, right? Then every time we receive the feedback from the market, we will analyze that feedback and try to improve our system. That is, the feedback from market can be a win or can be a lose trade. In this case, a lose trade, or in order to keep it more positive tone, we can say it's a not successful trade, right? It's not a successful trade, so we can learn. So basically, we see the order block right here, and we see the fellow gap. So we thought it retest. Then we entry. So we entry at 76 right there, and we push stop loss at 40. So we reach about 36 cents, and we are intended that it's gonna go take this high out because we see that the buy sell bigger trap right there. So that's our thinking when we play this trade. And right, let's take a look right here. Okay, here's what we put down. That's the long setup, right? And the risk reward is 1, 2, 3. Not bad, you know. 36 cents, what, $1.20. Yeah, that's how we enter trade that there. We saw the buy sell liquidity trap, and we saw sell liquidity sweep right there, rate right there, and the entry time is, you know, around 10:30 should be good right there. So we assume that this is gonna be at the low of the day, it's gonna be rebound, but in this case it's not. So this is gonna be the high of the day. So it's not working out for today. So that's how we see that. But now we look back, we can come up with a opposite trade, right? We say this is swing low. I mean, it is a swing, and wait for it to break either side, to the upside or to the downside, in order to take position. That would be a better, you know, trade idea right there. Don't go in when you don't go in the middle of the swing. You see, this is a swing. Don't take any position in the middle of it, right? If you want to take a short, then wait until it breaks this swing low and go in. If you have conviction to go long, or let it break this one and you have conviction to go short. If you want to fade the trend of markets, or if we want to be a trend follower in this case, right? Then wait for it to retest let's say you have this auto block, and this is the retest. If you want to wait for retest this auto block and take a short position right there, and look at that, is that exactly happened right here? You see, you have auto block, fatal gap, and retest right here. We also have right here. So in this scenario, we have to make quick decision right here. Okay, so next time we observe, okay, we allow the retracement right here. You see retracement right here? We have to see it's really, just retracement right here. And as soon as it breaks this candle, we have to get out. We have to get out. Because our trade idea is no longer no longer valid. Why no longer valid? Because we expect this up move have to break through this auto block in order to continue the uptrend and take this buy side liquidity. Otherwise, this short setup is in play. That means it's gonna take the sell side liquidity of this guy, which is where we enter. Because this morning when we enter the trade, right, we enter at this 32, right? As soon as we enter, we have it going again our position. Let me see, we're going at 76, right? And what is this one? The low 45. So 36, 45, so 31 cents. We lose 31 cents right there. We in the money. We out of the money 36 cents right there. And but the next minutes, we still out of the money, But in the 3 minutes later, we are in the money. It goes to 90 right there, 76, 90, 94, more 20 cents right there. At one point, it go up to 44. Right, this high of candle is 35, 44. 35, 44. Okay. So 35, 44. And we go in, right, we buy at 434.76. So 60, around 44, 34. So 24 cents. Yeah, we get a profit about 69 cents right there. Yeah, at one point we have 69 cents. No. We go in right here at 66, 76. Yeah, right here. And at one point we gain the profit is 67 cents. And we decide that we did not move the stop loss to break even, because our rule that we either hit the target right here or hit stop loss. That's our rule. So the question for us right now, whether we should modify this rule. right? Or just keep it. That's the debate that we have right now. Because in this case, 67. So we put our stop loss, right, at 36. So stop loss 36 cents. And when we gain 0.67, I mean, almost, you know, double that money, right? Then what's our rule? I mean, we try to build our trading system right now. And one of the tough decision we have to make, or we have to come up with a rule around the stop loss. When we should move the stop loss? Is that a question? If it go 50%, right? In this case, it go almost double, 100% of our risk right there. No, I mean we reach, right? We reach 36 cents. Yeah, I still, we need to working on this. So I mean, the simple way is that, you know, to keep it, to either hit stop loss or hit target. That's it. That's the simple way, right? That's the simple, the most simple way. So, but there is a second way you can do this, is that we can give out a rule that if the gain is more than 50%, in this case, it's 67 more than, you know, 36, right? Then we have to move our stop loss to break even. Okay, if the position move more than 50%, in this case more than 50%, right? More than 50% of the risk, then we have to move our stop loss to break even. Yep, so either the simple way, that's just no move on stop loss. But second way, that if gain more than 50%, of the risk, then move stop loss to break even. So yeah, that's the rule that we have to see. After the trade today, we're thinking about maybe apply this rule. Let's see. But the easy way, just keep the stop loss. You know, if it lost, it's a loss, so why worry, right? Just, but another way of thinking that, okay, why don't you take a lot? I mean, why don't you move to break even if the price move into our favor more than 50% already? That means when the market go down, that means we know that our idea, the trade idea, is wrong. Then we have to admit that and get out. Why we become fight again, you know, the markets. So that's two two ideas right there. Let's take the time off and thinking about that. Okay, that we need to do more research on this. I read some book and I heard some guy he applied this way. So basically he said when he put a trade in and it moved to his favor more than 50%, it doesn't make sense for him to take a loss. So he either move to break even, or he take early profit and get out of trade, because he said that if it moves more than 50% and it retracement, that means his trade idea is wrong. Then he have to admit that trade idea is wrong and get out instead of try to be right. Okay, try to be stubborn and let it hit the stop loss. So that's the good argument right there. So and today we really learn a real lesson right there. Whether we move our stop loss or just let it hit. Okay. Because I remember last time when we move our stop loss, then the market start go back up, and we stop our trade because we put we move our stop loss. So that's a debate right there. Either way, we have to stick to one of these principles. You cannot do both, or we may do both. I don't know. That's the thing we need to work on. But for now, let's keep it simple. Never move stop loss. If we hit it, we accept it and learn from that. Okay, let's say that we go with this scenario, right? Okay, we move on. We don't move stop loss, even though it's more than 50%, it moves to our favor. Then we learn a set lesson today that we have to observe the short setup right here. When it hit right here, you see a rejection right there, and it moved down close below this swing low. Then we have to get out. Don't get stubborn, because we expect it to retrace right here and boom, go and break. But if it did not break, then you know that it in the downtrend right there, because the auto block, failure gap, and retest, it continues to go down. Thus, put that in. A second thing we want to point out that why we try to go long when the overtrend. This morning when we look at the 4 hour or 1 hour, you see it's really bearish, so there's no reason to go long at all. You see huge to go long. So that's the human nature that I say earlier in the recording, in the review today, that we try to resist against the market. That's our default reaction right there. And we should not do that. We have to do the opposite. What our survival mode tells us. It's called survival mode, which is we fight against the markets. We should not. We should go with the least resistance. We always go with the resist the market. Go with the least resistant approach, which is in this case just follow the trend. That's easy. Why we have to do so hard? Just follow the trend. It's supposed to be easy trade for us, right? Why we fight so hard? The market is coming down. Why we have to fight against the trend? That's the huge lesson for us right there. And later on, I saw right here, we say, okay, later on, I saw, oh, maybe this is another entry for us at 10:51. right? Because it's close to this stop loss that we are anticipate. It's 36, but the ritual better, but it's not. It get stop out also. Right? It's just a no. I didn't do any trade after that, but it's just a no. Just see the psychology after that, because we want, you know, we want to go long, right? So that means that our mind is just look for the pattern to go long. That's the risky business right there. So somehow we just don't trade the market. We trade what we believe, and that is the truth that is showed today, right? And why we want to go long? Because that's the human nature. We want to resist against the trend, against the market. The market is going down, and we try to catch the falling knife. That's the cliche right there. Yeah, and we keep catch the falling knife. Okay, and then we say, oh, at 10:59 it's better, right? The bad entry understand, right? And then we come up with another one at, you know, 11:30. We said, yeah, that's perfect, 11:30. We said auto block right there for 11:30, right? And let's see, 11:30. It did. It did go up a little bit. That's 11:30. Yeah, right here. But you know what? It go up a little bit and then it go down again. So we get stop out again. That means we try a couple of times. We try to go long. The reason we want to try to go long because we want to go long. And why we want to go long? We don't know why that ideas come from. We have to re-examine that. Why we wasn't go long? Because market in the sell up, but we want to go long. Why we resist again that? That's the tendency. That is the belief or the thought that we not have in the trading. Somehow we have to remove that. Somehow we have to remove the idea that we resist against the market. Just follow the flow of market. Take the easy trade. We try hard. Yeah, that's the psychology that we need to working on. Because when we believe, we just trade what we believe. We don't trade the market. That's psychology. Yeah. We believe that we need to do long trade. So every setup we look, we see a long. Look at that. Oh yeah, right here, and yeah, right here. Auto block for the retest. Go here, but it now it's not. So we have to be aware that the mental errors or the mental error that we make right there. Why don't we do the opposite? Why don't we sell every time it swing high right there? It risks, you know, auto block in the other side. Why we have to go short? I mean, why we have to go long? So that's the homework for us. I mean, today we see the huge lesson right there. Let's put into our journal. So we'll trace it right there. Why we did go long? Where is that idea come from? Why? Don't. I mean, why didn't? No, sure. Why we resist the trend of the market, right? Which is the trend of markets, which is a bearish. Yeah. Yeah, that's the psychology lesson for it right there. Why would it go long? Why would it go shorter? So the easy trade should come to us easy, right? Just follow the trend, which is the least resistance path right there. Why we resist? Just surrender. We try to be right. Yep, that's the psychology lesson we learned from today. Beautiful right there. Yeah, I think time's up, so let's wrap it up. Yeah, that's the lesson we learned from the trade we lost today. Man, basically it's the huge down there right there. One more thing I want to tell that look at the volume. Today is huge sell. You see the volume is 100 million share. The average of 60 days 70, so that's a huge sharp day. And you know, we already look at the look at the weekly candle right there, huge $13 move right there, $13 move, right? The average only $6.33, but it's 70. However, the statistics say that the property for the week to be up close is 64%. So this week it fall into the 36% down close right there. But you see the huge, man, it broke this trend right there. Boom, boom. We can see the short right here, right? Auto block, follow gap, and retest. Boom, go down. It's gonna take the buy side of it right here. So somewhere, somehow, other trader, they see repellent. They short very hard right there. They make a lot of money right there. But we're not there. We don't see that yet. But if you look and if you look at the 4 hour, if you look at 1 hour, I mean 1 day, we see the huge gap down right there. So something right there, whenever you see the huge gap and a very huge down close, man, the gap is huge. Look at this. The gap is about $2. Look at that. All right, anyway, we wrap up right here. Thank you for your time and talk to you later. Bye.